What's going on? Welcome back to Trending Stocks. SoFi is doing rather well today. I want to go over some of the current data points, break it down on what is really driving it higher, and go over everything else you need to know. But first, make sure you guys hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So currently SoFi is above that very strong resistance level of $8 brought on by options. So currently it is up 4.7%. 34.4 million shares have been traded. We are just about to head into power hour. So today definitely is getting the attention of big money. No official news from SoFi whatsoever. A lot of analysis and just articles coming out about SoFi saying that it is a crazy buying opportunity, and I think a lot of us do generally know that, especially based on the last earnings. Just what has happened price action wise has been somewhat discouraging. No new analyst ratings as of right now. Technicals via the Elliott wave is looking a lot more optimistic, so it does have a pivot point of $6.71, and for as long as SoFi is above that, then it is anticipated to get back into double digits, so 10.01 to 10.70. So that is kind of optimistic. But as far as what shorts are doing, currently they are returning about 28,000 shares. 13.7% of the free float is being shorted. 124.94 million shares overall are being shorted, and cost to borrow average is 1.03%. And it is interesting to note the fact that the cost to borrow minimum has just gone off. And obviously you did frequently see one broker out there physically paying people to short SoFi. That has long gone. So maybe the manipulation in the broader market is kind of retreating, and I'm going to play this video near the tail end, and ultimately this does kind of point to a broader market rally including SoFi and many other stocks. So I wanted to play this near the tail end, so maybe it's correlated with that. That's why brokers aren't really incentivizing shorting right now. Who knows? That might be something positive down the line coming. But as far as options right now, $5.82 million in calls being purchased, 1.43 million in puts. 48% of all the options being done today are optimistic. So that generally is fairly good. Works out to be about $2.79 million. Of the call options that are being purchased, you do see a very strong consensus now for it to be over $8. So optimism is starting to rush back into SoFi. And like I did a comparable yesterday somewhat with Palantir and a lot of other growth stocks, like things are going higher. Of course, PayPal really did mess up royally on their future guidance, but generally speaking, a lot of good growth stocks are still very optimistic about 2024, similar to what SoFi did say. So I think with a lot more companies unveiling pretty good earnings and as well good guidance, that's giving SoFi and a lot of other growth stocks a nice boost up. And as well, behind the scenes, people's just mentality is that rate cuts will be coming right around the corner, so in May, so sooner rather than later in my opinion. So overall, I think pretty good things are coming. SoFi obviously does have to stay above $8 by the end of Friday, so you're going to see a hell of a lot of volatility more so on Friday, because technically right now SoFi can be above $8, just it has to land on the expiry date. So this is where you might see a push down below $8 depending on where it's at, coming from market makers. But moving on though, these are some of the transactions that have occurred on a secondary market above $100,000. One notable one, 1.58, but the dollar value, I guess in comparison to the last several days, is lower. So not that many long investors are getting in, rather algorithmic trading. So of course that's been affecting SoFi quite significantly in 2024. Some points to really watch for, like I said, $8.28, that is a very strong pivot based on the fib levels. And aside from that though, especially by Friday, closing above $8 is key. So most likely it will be stagnant between this S1 and the pivot unless there is some continuation of some momentum. Then if it does get above this pivot point, then it can trade between the 828 and 928. No matter what though, fib levels are fairly wide, so there's going to be a hell of a lot of volatility. So just be comfortable with that. So like I said, I just want to quickly play this video because this does put it in perspective on how there will be a continuation of a broader market rally. So maybe like a Santa Claus rally or post Santa Claus rally part 2.
Welcome back to the exchange, everybody. We're sitting just points away from 5,000 on the S&P 500. Our next guest says the rally still has legs and will broaden out from here. Joining us now with where he's buying is 𝗖𝗢𝗡𝗡𝗘𝗖𝗧, Chief Investment Officer of Equities at Federated Hermes. Steve, welcome back. Good to have you with us. You have a price target on the S&P 500 of 5,200. That's about 200 points from here. Not a lot of gain for the rest of the year. No. Are you tempted to up it based on what's happened so far in 2024?
Yeah, tempted to, Tyler. You know, we set that target, way back in the third quarter last year, and did get a lot of it early on, even in the fourth quarter of this year. So I've been getting a lot of questions about that. And what I've been telling our investor base is, I think a little bit longer term here. Certainly the market's a little overheated short term. And yeah, I don't know, we could end higher than 5,200. I kind of like to look out 3 years. There's a lot of talk about the big run we've had. We only just 3 weeks ago crossed over the old high of the S&P. So from our perspective, the bull market has just started. We've got earnings. We didn't come through an environment here where the economy is decelerating a little bit, but it's in a kind of not too hot, not too cold environment for the Fed. The Fed is pivoting. Earnings just started to resume growth after a one-year earnings recession. We've got, earnings going up to 300 a share on the S&P by 2026. 2025, we're at 275. That may sound like a lot, but the nominal GDP of the U.S., which is what S&P 500 companies eat, is going to be up about 40% off 2019 by 2025. So I think the earnings numbers that we're using are pretty conservative. So you've got a pretty good setup for stocks. You got earnings resuming growth, the Fed pivoting to lower rates. We're not where the market is. We've got like 3 cuts this year, but still cuts ahead of us. And it's only the leading stocks that have broken the market through the old highs. So we're thinking it's a time for the market to broaden out. And in our way of thinking, Tyler, to get back to sort of your original question, there's lots of stocks that can go up more than 5%, which is what we've got left against our 5,200 for this year. And the overall market still just sort of crawl along, which is kind of how we see it. So we're looking for laggards. We're tilted towards value names in particular.
So yeah, there you have it. I've said in the past, time and time again, as the market is ready to have a very nice breakout, you're going to have a lot of institutions scouring the market for value plays. So I think right now a lot of people are focusing on AI, Palantir, and whatever else, but SoFi often enough gets overlooked, despite having some pretty kick-ass earnings. I've said this time and time again. So in reality, I feel like over the next couple of weeks, you are going to see a lot more attention brought to SoFi, and that could cause a lot of volatility. But no matter what, though, based on the technicals, things might be looking potentially better in the short term. So maybe $9 might be coming early next week. And then if things continue, then $10. So let me know your thoughts. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And with all that said, I appreciate all of you watching.